Hi, I'm Joel Gilgard with Gilgard Analytics. Thank you for tuning in to this video tutorial on U.S. stocks and basically their geographic location. If you're thinking of moving your company to a specific place, or if you're thinking you want to move away from because they're not doing that well, this will give you an approximate understanding of where jobs are, where the companies are going to, and then of course you're looking year-over-year change, which is always interesting. And so we will just start out here. I'm going to make this a little bit larger so it's easier to read. And again, this file is out there for everyone to view on Gilgard Analytics website. And the intent is that this will help you make decisions, either for investment purposes or purposes where industries that you want to go into, or where you want to move to, if you want to move your businesses there or move them away from places. So right now, these are just basically averages, right? This is the grand total, and again, this is New York Stock Exchange and the NASDAQ, and the parameters there is I need at least 8 years worth of trading history, and the company has to be at least 700 million in size. So starting, the average age of a company is 61. So that, let's see here, I'm 57, I was born in 66, 57. So the average company is basically at retirement age at 62. The average CEO pay is 3.32, and if you looked at another video that I had, I said the average CEO pay was 3.33 million for this particular period, and this is the picture that we took is from February of 2023. And what you'll discover, if you haven't, right, is that numbers will always look different. You look at this one, you look at something else out on Yahoo or Google, right, and that is good. If you see identical numbers, very likely they've just been copied, right? Now, what you want to see is the change, right? That's for example, like I use just jumping to a different topic, but when I analyze U.S. real estate prices in various cities, I like to use Kiplinger's because I think they have the most solid numbers. I use anyone else, I think they tend to exaggerate. They use like the most expensive neighborhoods. I like the real average. But anyway, so CEO pay in basically this is not just the U.S. but international as well, increased by 6% year over year. Market cap as of February it was at 49 trillion. It decreased by 16% year over year. I'm looking at 2,195 companies, in these parameters that I was explaining. 700 million in size, 8 years worth of trading data, decreased by 8%. And then for all of these companies, the 2,195 companies, the number of employees was at 49,285,000 employees. And so the companies, they increased their number of employees by 1%. So not surprisingly, now basically here, keep in mind, United Kingdom, Canada, Ireland, so I wouldn't put very much weight on international companies here, but it gives you an indication of how they're doing. What is more accurate are the states in the U.S. Is much more accurate and what I mean by that is not all companies in the United Kingdom list on the New York Stock Exchange or the NASDAQ, and that's the same thing with Canada or Ireland. So these are just indicators, whereas the U.S. states, this data is much more accurate. So looking at Canada, this is the biggest one. The average company there is from 1984. So this is more than a generation, but it's certainly much younger than by 23 years. Average CEO pay in California is slightly below average. It actually went down by 3%. Now, what is interesting here is the market cap in California is $10.5 trillion, and they make up more than 20% of the New York Stock Exchange and the NASDAQ. Right? Just gigantic numbers. That said, their year-over-year market cap went down by 29%. The number of California companies that I track went down by 5%. Now, if you're looking for employment, California, these companies, these 287 companies, they increased employment by 6% to 3.6 million approximately. Now we're gonna look at some of the largest states here, because I think this is fairly interesting. And what we should do is we should filter this by largest here. Okay, good. There've been some misfiltering. So New York, the average company there is much older. So that's where industry was before it moved to California with Silicon Valley, etc. 1959, more in line with basically the average age of a company in the U.S. and around the world. CEO pay is 6.3 million. Year-over-year change, 31%. And so take this with a grain of salt. There might have been some added companies. Some companies were, they increased the company. You might have had CEOs leaving, companies, and you bring in more junior CEOs. They get paid a lot less. Market cap in New York is less than half of what it is in California, changed by only 10%. Right? So they have more conservative stocks. Number of companies, 165. That changed by 15%. Employment went up by 4% in New York. Washington State, average age of company there is from 1970. So they're about 50, let's see here, 57 minus 4, 53. Average CEO pay is slightly lower, 2.73. It went down by 3%. Market cap is 3.5 trillion, went down by 24%. Number of companies stayed the same. Number of employees stayed the same as well. Texas, 56 years of age, the average company, so much older than Washington or California, but still a little bit younger than New York. Average CEO pay, 3.18 million, went up by 5%. Market cap in Texas actually went up, right? And one of the reasons for this is that's where oil is produced, right? So you have Exxon and many other companies are listed there, and so the oil companies have done fantastically well so far, right? Up to February anyway. Number of companies decreased, so there's 177. But jobs went up a lot, right? So this means that this tells me that if you're a mechanical engineer, energy engineer for the big energy companies, Texas is the place to go. Illinois companies are by far the oldest, so you have more manufacturing. CEO pay, if you're noticing, the CEO pay is except for New York, is fairly much on par on average. Went down a little bit. Market cap in Illinois is almost, not quite half of what it is in Texas, right? Went down by 7%. So, the industrials, they didn't go down that much. And the number of actual employees, so they lost. So manufacturing lost about 4%. Let's go to Massachusetts. 1970, CEOs are paid far less than average, but so they went up. Market cap went down by 10%, right? So this is the way to read this, and I want to just give you an understanding of. Let's go to the state Kentucky, right? So Kentucky, they have one company listed, on the New York Stock Exchange that falls within those parameters. What else do we have? Arkansas has one. and Vermont has 1, Puerto Rico 2, New Mexico 1, North Dakota has 3, South Dakota has 3, West Virginia 4. Anyway, you get the picture. So I hope you felt that this tutorial, this file was helpful. If you have any questions or any comments, please let me know. Thank you.